Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague Tracy Reinick. We've got two exciting picks for you, so let's jump right into the action. My top pick is a provider of heating, ventilation, and air conditioning systems. The company serves building owners and developers, general contractors, engineers, and property managers. They also offer plumbing, mechanical and electrical installation, fire protection, and maintenance services. The company I'm referring to is Comfort Systems USA, ticker symbol FIX or FIX. So, Comfort Systems is an umbrella company composed of more than 45 operating companies in over 170 locations across the United States. They design and install HVAC systems for data centers and new buildings, as well as replace outdated systems in existing establishments. But my reasoning for this stock pick goes beyond the surface level. The Houston based company has become an AI data center cooling play, as these data centers have significant air conditioning needs. Comfort Systems USA leverages artificial intelligence in two main ways: internally to improve operational efficiency, and externally as a key infrastructure provider for the AI data center industry. It utilizes an AI powered platform called a quant to create a vast, searchable knowledge database based on the collective expertise of over 2,400 technicians. The Quant Systems AI actively aids technicians in real time problem solving, which has helped the company achieve more efficient first time fixes, reduce resolution costs by 49%, and improve overall technician productivity. Externally, Comfort Systems employs a method referred to as immersion cooling, which uses innovative systems for precise temperature management to allow servers to be packed closer together, saving on energy consumption. The company's backlog has been swelling thanks in large part to demand for data centers, reaching over 9 billion for the first time, an increase of 3.4 billion from when the year began. So this is a stock that is not only highly ranked by our Zacks rank system, but it's also outperforming the market off the April lows. And as we'll see, the company is firing on all cylinders. That's a bit about Comfort Systems' background and services. Let's shift gears a bit and look at some fundamentals for this company. Moving to our snapshot page, we can see that Fix is a Zacks rank number one strong buy. The AI infrastructure provider has established a healthy track record of beating earnings estimates, as we can see here, with only two quarterly misses over the past 5 years. Fix has delivered a 30.4% average earnings surprise over the last 4 quarters, so they've been very consistent with beating earnings estimates by a wide margin. Just a few short weeks ago, Comfort Systems reported third quarter earnings of $8.25 per share, which represented a 33.06% beat versus the Zacks consensus estimate. Earnings grew 102% from the same period last year on 35.4% higher revenues. And we can see that analysts covering Fix are mainly in agreement in terms of revisions and have been raising earnings estimates across the board. Estimates for the fourth quarter have been increased by 20.04% in the past 60 days. The Q4 Zacks consensus estimate now stands at $6.77 per share, reflecting potential growth of over 65% relative to the year ago period. Revenues in the fourth quarter are projected to climb more than 22% to 2.28 billion, and the stock price has reflected the fundamental growth. Fixed stock is up more than 200% off the April lows. Notice this steady trend of higher highs, leading to sustained outperformance and rising moving averages. Between the strong fundamentals and appealing technicals, these are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So, Comfort Systems USA, ticker symbol FIX, is my top pick of the week. Shares have really come on strong as the market returns to all-time highs. I see more upside ahead for this stock. Next up, Tracy will share with you her other top pick of the week.
Thanks, Brian. So I'm bringing a completely different company than what Brian just talked about, but what they do have in common is rising earnings estimates and the Zacks #1 rank of strong buy. And mine is on the AI side, but it's neither a chip company or in the AI infrastructure side, building the data centers. It's actually on the product side. And there's not as many companies that are finding a lot of success on the product side yet. But there are a few of these, and this one, Innodata, ticker INOD, is actually a small cap company as well. That's even more rare. Our small cap analyst here at Zacks uncovered this one, Innodata, and the Zacks rank also uncovered it. And now it's back to a Zacks #1 rank after its recent earnings. Let's take a look and see why we're at the #1 rank, what's going on with this chart, what's going on with this business, and why you should keep it on your watch list if you're interested in AI stocks. Okay, let's look at Zacks.com and Innodata. Okay, it's got the Zacks #1 rank. Here's the style scores: F for value, D for growth. Kind of surprised at that one, but it's got the A for momentum. It's got an F overall for the style side. So the stock did take off and it has gotten very expensive. But even as I'm recording this on November 11th, you can see the shares are down quite a bit and it has pulled back in addition to all the AI stocks here in October, November of 2025. Now, scrolling down, we're just going to take a quick look at the chart, and you can see it's got great earnings surprise track record. It's only green there, but earnings on the increase, and you can see this 2026 light blue line is looking good compared to 2025. They did beat again, and they did confirm their full year revenue outlook, which is up 45%. Scrolling down, this is one of my favorite charts on the quote page now, the sales and EPS growth rate, because it gives you the basics in one quick look on this chart. And you can see 2025, there it is, sales on the left-hand column, 45%, just as they're predicting. And then they did not give an estimate for 2026 yet. We're going to get that, but they did say they expect 2026 to be transformative for the company. I don't know how much more transformative it can get because they're doing a great job at getting new contracts in for their data platform. It's AI driven. And so they're able to get these new customers in. And you can see 24% expected so far for next year with a 33% growth on the earnings side. Now they are earnings positive, and you can see the forward PE over here. And this is why it's an F for value is at 81 times, because everybody's just like, oh, it's a company that has an actual product and they're making money. I am interested in. So they all piled in. Valuations are a bit stretched, but let's take a closer look at what's happening with those detailed estimates, because this is what gets us the #1 rank right now. The strong buy is that the analysts are likely raising, and they are. Here's 2025, 2 in the last 7 days since their earnings report, and 2 for next year too, because when they're using words like transformative, you tend to get a little bullish, right? And you realize, hey, I might be a little bit too light here. And you can see the earnings growth here, 84 cents now expected for this year and $1.12 for next year. So that's where we're getting this earnings growth of 33% for next year. But look at this. This is in the negative here for this year, down 5.6%, because they did make 89 cents last year before they were kind of discovered by the street. But we're getting that great revenue growth. And the company has said they entered into another $68 million worth of contracts. And they're now launching federal Innodata Federal is what it's going to be called, to get those federal contracts. And they have a $25 million contract now in that segment. These are small numbers, I know, compared to big companies like Palantir and the like, but that's why it's a small cap. And that's why it's interesting and exciting to get a small cap AI play. And this one definitely is. So while it may seem like, oh, just 25 million from the federal government, there is possibility for growth there, as we know. And so try to get this stock trading as cheap as you can to lock in this growth at a little bit cheaper price, but they are executing and getting these contracts in. And like I said, they also announced another 68 million in the last quarter of new contracts as well. So that's the name of the game when you have a platform and a product like this. You're not building the data centers, you're not making the chips. You've got to build this good product and you've got to get it out to customers. And that's what they're doing. Shares are off those recent highs. Let's take a look at, I'm just going to look at the price and consensus once again to get a little bit clearer picture. We don't yet have 2027 popping up on here, but I'm assuming it's going to be a bit higher as well. But you can see the shares soaring on the AI trade to new highs, but off considerably off those highs. So these types of small cap stocks in the AI side are going to be volatile. Look for pullbacks and sell-offs as a nice way to get in. But you are going to pay up for these earnings, and people are willing to pay up for it right now on the AI side. So you are going to get it at 81 times. Just out of curiosity, going to look at one other thing before we end for today. And I just want to see price to sales at 9 times. So that is a bit of a stretch, but the growth is there and they are growing that sales side pretty quickly. So hopefully that comes down a little bit. But anything over 10 may be too stretched, and it's at 9, so not as bad as I would have thought given the big increase in the stock. So the AI trade isn't going anywhere. It will have its ups and downs, but a small cap AI trade is a little rarer right now, and especially one that actually has positive earnings and great revenue growth. So be sure to keep Innodata on your watch list. It is a strong buy right now, and it's joining the others on the infrastructure and chip side that have the high Zacks rank as well. So be sure to subscribe to get all of our top stock picks. We're bringing them to you every week here on our YouTube channel. So make sure you subscribe here to get them all. And I'll see you again coming up in the next couple of weeks on Zach's Top Stock Picks. Be sure to join us.